Hello everyone, and let's start off with the news. Cardano Midnight has launched on the testnet. Now, Midnight is multi-chain, but it has to be kind of like processed on Cardano. So the Cardano Midnight testnet is finally launched. Only developers are invited to test out the sandbox environment for now. So the long-awaited testnet for Cardano it has gone live. This new development, addressed in a note to developers, has placed Cardano in the spotlight. According to the announcement, the Cardano sidechain is ready to welcome blockchain developers interested in building on it, obviously in a test phase. The expectation of the testnet launch dates back to 2023 when Cardano introduced the Midnight Protocol as its privacy solution. Since then, the engineering team has invested time into development to prepare for a full launch. The protocol is based on the premise that developers must protect sensitive data to deliver usable decentralized applications. Now the team is confident in the capacity of the testnet to provide a stable sandbox environment. Now developers can experiment with building on-chain applications that protect sensitive data. So it is like kind of like a privacy protocol, not for everything, but like, there's sensitive data and they can actually protect that sensitive data so it doesn't actually, is not actually seen. It wants to merge privacy with regulatory compliance because obviously, like if you make everything private, basically like make everything unviewable, the government's not going to like that. So it kind of has to find a middle ground. It's focused on organizations and developers that are interested in upholding blockchain's transparency. So these entities must balance data protection, ownership, and utilization. With Midnight's mainnet-like environment, developers would not fear building and testing. Additionally, this offering brings increased use cases for the Cardano ecosystem. So this is actually pretty cool, but it's not going to affect price because it is just the testnet launch. Maybe if it was the mainnet launch, it would actually affect prices a little bit. But since it's just a testnet launch, it does not impact prices at all. However, they can get the ball rolling, make some apps where a lot of the user data isn't actually out there in the open. And I think this is a good new development for Cardano. They've been talking about this for a while. Hopefully in the bull run, this comes out on the mainnet, and this will actually induce a price FOMO because we know that Cardano could definitely use a price pump. So Cardano Midnight has actually launched on the testnet. It hasn't gone on the mainnet yet. It'll probably be a couple months before it actually gets on the mainnet, but hopefully sometime next year during the bull run, it will actually get on the mainnet. Bank of America, for those of you that have been paying attention, has actually gone down, and it went down for several hours. And people are seeing $0 balances, but their debt is still showing up. I think they've kind of fixed this for right now, but I don't really use BOA, so I actually wouldn't know. But was a nationwide outage. So tens of thousands of Bank of America customers have reported a network outage preventing them from accessing their bank accounts or seeing a $0 balance. Reports of service issues started to come in at about 4:26 p.m. UTC, which is probably around, I would say, 11:26 a.m. Central Standard Time, and peaked about 1 hour later with nearly 18,000 BOA customers reporting issues with a 15-minute interval. So data from real-time network outage platform Down Detector shows basically number of Bank of America outage reports over the past 24 hours, time reported in UTC plus 10. So I think it was like most severe, like around 1 or 2 o'clock when I was streaming last time, or when I first streamed earlier in the day. And it kind of like tapered off since then, but it was still down for at least 8 hours. Around 98% of the reports made related to Bank of America's mobile and online banking apps. Bank of America hasn't issued a public statement addressing the issues. However, it reportedly told CNN that network outages have largely been resolved, but not for everyone. And a couple of people have commented. Everyone is saying it's fixed. It's not. Still not fixed. Been out at least 8 hours. I think it was out probably a total of almost like 10, 12 hours. I think most of it is actually fixed now. Some people went to like branches and stuff, and the branches were not allowing deposits or withdrawals. And that basically signals that the problem was still there. While most impacted Bank of America customers responded with anxiety or anger, others made lighthearted humor of the ordeal. I'm not really sure, unless I tried to use a BOA credit card, I would have actually noticed, because I don't really check my bank balances every day. Every once in a while, I have my alerts set up if something like weird happens. But otherwise than that, nothing much else. Obviously, people from crypto and Bitcoin pointed out that BOA's failure is why they actually need why they need to decentralize things. I can't disagree with them on that. Bitcoin, and of course, they point out that Bitcoin hasn't suffered a network outage since March 2013, when the network was still largely centralized. So, they're kind of using this opportunity to criticize Bank of America and the centralized banking system. And of course, BOA, this FUBAR, does not actually bode well for their reputation. In other words, Tron's network has actually posted record revenue in Q3. The Tron network has posted record quarterly revenue, largely driven by increasing stablecoin activity and an effort to recapture a slice of the growing meme coin market. That's what basically Sun.pump or something, the Justin Sun's thing, was meant to do. But, Tron definitely has the money to do it because they are making a lot of money. They're actually in the profit. It is a profitable business to run Tron. So Tron Network posted a record $577 million in revenue for Q3, putting it ahead of mainstay blockchains, including Bitcoin and Ethereum, in terms of quarterly income. Tron brought in $577.2 million worth of revenue in Q3, with 74% of its revenue coming from staking, while 26% came from burning, according to data from Tron Scan, which was also cited by Tron founder Justin Sun. So essentially, Tron has made a lot of money, basically more money than almost every other blockchain out there. So it's worth noting there are significant differences in how blockchain networks generate income, often through a complex mix of fees, revenue, and other more technical avenues. Comparisons on a purely revenue or fee basis may not perfectly reflect a blockchain's total income, but Tron's income is very impressive, especially since it is actually a much smaller network than things like Ethereum. So basically, if you look at like Tron's share of stablecoins, it's basically like Ethereum is first and Tron is second. Ethereum has 48.98, Tron is 34.92. But I think Tron's price should actually go up to reflect its growing use in stablecoins. Yes, the ecosystem is growing, but it's really not growing that fast. The TVL for Tron is like getting up there, but obviously still has a long way to go. The Tron network is popular with users in emerging markets of South America and Africa, where high inflation and domestic currency concerns often lead to high demand for more stable assets like the US pegged stablecoin Tether. And that's what most people actually use for Tron, because they do actually use Tether on Tron. So more or less, like Justin Sun is basically showing off like how it's actually Tron is actually making a comeback in meme coins, how a lot of Tether users actually use Tron and how Tron has value. They do have a lot of income, so Tron actually might do pretty well in the next bull run. We'll have to see how that goes. The SEC, despite appealing the Ripple lawsuit today, did actually lose an enforcement officer. Their enforcement chief, Grewal, has actually stepped down. The end of his tenure, marked by aggressive cryptocurrency enforcement, could signal a change in the agency's approach to crypto, but obviously not, because they decided to sue. They decided to appeal the Ripple case. According to an October 2nd announcement, the United States SEC Commission's chief officer, Gerber Grewal, will step down on October 11th after a stint distinguished by his aggressive policing of the cryptocurrency industry. The SEC has not chosen Grewal's permanent replacement, but his lieutenant, basically chief enforcement officer, will be the interim person, and he might end up being the permanent person. We don't really know. This guy recommended more than 100 enforcement actions addressing widespread non-compliance in a quickly growing crypto space, including against the operators of the largest crypto asset trading platforms in the world. So basically, I do think that the director of the Division of Enforcement, Gerber S. Grewal, I do think he was after the one behind going after a lot of those exchanges. So his abrupt departure has prompted speculation that the SEC may be preparing to take a softer approach to crypto. If that's the case, they didn't really show it with the Ripple appeal. Some people are speculating because Harris has actually broken her silence on crypto and was more pro-crypto. I don't really know about that. I'm not really sure why he left, but it seems like Gary Gensler is continuing on his warpath. Perhaps the inevitable end to a campaign of unlawful harassment and misrepresentation resulting in many embarrassing defeats in court, Jake Chervinsky, Variance Fund chief legal officer, said in October 2nd post on the X platform. Political pressure on the SEC has been mounting ahead of the November U.S. presidential election. In July, Republican nominee Donald Trump pledged to fire SEC Chair Gensler if elected. In September, Gensler came under fire from lawmakers and agency members during a House Financial Services Committee hearing over his handling of the crypto regulation in the U.S. So there is a lot of pressure mounting on Gary Gensler. And I think like some of the people from the regulators basically see the writing on the wall, and they are going to start leaving. And I think the SEC is going to see a lot more desertions in the time to come. PolyFi might actually be about to explode. And what PolyFi is not Polygon, obviously. It is the election-based meme coins, because we have 1 month until the election. And so those coins should actually start gaining some value or should start heading in some FOMO. I think it will depend a lot on who wins the election, but I think they will actually be pumped up until that decision comes down. And I think they're going to be buoyed by the fact that election betting is now actually legal. The U.S. Court of Appeals has actually greenlighted election prediction markets. The ruling paves the way for election prediction markets to operate in the United States. This is a big, big win for places like poly markets. And there's huge opposition from regulators, but the judge basically told them to stick it. So originally a circuit judge actually ruled in favor of poly market or ruled in favor of Kalshi. So the CFTC wanted to withhold the ruling until an appeals court could actually look at it. Well, now the appeals court has looked at it and said that election prediction markets are legit. So the ruling paves the way for election prediction markets, possibly including Web3 platforms such as Polymarket, to operate in the U.S. On October 2nd, the U.S. Court of Appeals for the District of Columbia ruled against the CFTC bid to stop Kalshi from listing derivatives tied to political outcomes on the eve of the U.S. presidential election. Obviously, they're afraid of corruption and basically people throwing races for this if they get bribed enough. Now, a presidential candidate is not going to do that, but a smaller office definitely might. So Kalshi made a big, big win despite the pushback from regulators. And this definitely might help some PolyFi tokens because I think they're going to be seen as kind of like related to that in this instance. And last of all, but not least of all, Monero is shrinking in terms of on-ramps. Kraken has actually kicked Monero to the curb in Europe. So in the EU economic area, Kraken has decided, hey, the regulatory stuff is getting too tough. We're going to kick Monero to the curb. So Monero's price fell by 8% today, but that's not really all that surprising because everything's price fell today. So I don't think it had a lot to do with this, and I don't think a lot of people actually knew about this. Kraken announced it would stop supporting the privacy-focused cryptocurrency, but in European Economic Area, or the EEA. Kraken announced it would stop trading in deposits for all Monero markets in the EEA on October 31st, 2024. So you got a month if you're in the EEA to get your Monero out. This includes trading pairs with the US dollars, Euro, Bitcoin, and Tether's USDT. Since you can't actually kill Monero as a protocol, they just want to kill its on-ramps so people can't actually use it. I do think XMR is used a lot for money laundering and stuff like that because they can't really trace it. So Kraken said, after thorough consideration, the exploration of all viable alternatives, we concluded we have no choice but to delist Monero in the EEA, or the European Economic Area, due to regulatory changes. While Kraken will stop trading in deposits for XMR, users have until December 31st to withdraw their tokens. If users do not withdraw all their XMR tokens by the deadline, Kraken will convert them into BTC. So even if you don't withdraw them, you won't actually lose that money. They will just be converted into the trackable BTC. The converted tokens will be distributed on Jan 6, 2025. So early next year, if you don't convert them, Kraken will convert them for you. Obviously, for the privacy advocates, this is a big blow. Obviously, the new regulations in the EEA do actually prohibit the use of privacy coins to some degree. So earlier this year, Kraken ended XMR trading in Ireland and Belgium. On April 11th, the exchange warned its users to close their positions on XMR or have them automatically closed. In 2021, Kraken discontinued support from Monero for customers based in the UK. So essentially, the EU is actually cracking down on this as well. And basically, Kraken has kicked Monero to the curb. So privacy-based cryptos are having a very hard time. Wouldn't invest in any of them right now. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.